Hi, I'm Pat Keown, a research analyst with Thomson Reuters Lipper, and I'm here to speak to you about fund flow activity for the week ended Wednesday, April 13th. Let's start by taking a quick look at last week's market activity. Equities continued their march forward last week. The S&P 500 index was up 0.8% on the week. This is our 9th consecutive week of gains, during which time the index has appreciated about 12.5%. Energy and financial stocks carried the rally last week. Financial stocks were up on the news, better than expected earnings from JP Morgan. Not only did the positive earnings lift JPM stock, it also carried the rest of the financial sector upwards as well. Energy stocks were up on rising oil prices. The Brent crude hit a 4-month high on the rumor that Saudi Arabia and Russia would agree to an output freeze this weekend at their meeting. All right, let's turn our attention back now to the fund flow activity. Let's take a closer look at our macro fund groups. Last week, we saw equity mutual funds had net outflows of $4.2 billion. Taxable bond funds took in $849 million in net new money. Muni bond funds continued their streak of inflows with $521 million. And money market funds saw about $5.1 billion leave their coffers last week. Moving on, let's take a closer look at our equity mutual fund group. As the outflows last week, the $4.2 billion marked the 5th consecutive week of outflows for the group, during which time they've seen about $14 billion leave their coffers. Somewhat surprising and somewhat in contrast to the performance for the group, which has had positive results in 4 out of the last 5 weeks. Last week's activity, we see domestic equity funds once again with significant net outflows, about $3.4 billion. Within that group, large cap growth funds accounted for $613 million of the outflows. And non-domestic equity funds, and a trend we're starting to see as well, they had net outflows. Had about $815 million leave last week, led by international large cap core funds, which had net outflows of almost $400 million. Let's take a closer look at equity ETFs now. For the week, the group saw $561 million in net outflows. This brings their year-to-date net outflows to roughly $6.5 billion. The largest outflows last week came from the SPDR Dow Jones Industrial Average product, which had about $540 million leave, followed by the iShares MSCI Japan ETF, which had roughly $513 million leave. On the plus side, SPDR S&P 500 ETF took in $1.3 billion in net new money. Let's move on to our taxable bond fund groups now. We'll start off with mutual funds. The group had $849 million in net inflows last week. This is their 7th weekly inflow out of the last 8 weeks. Still, though, net outflows for the year to date, roughly $4.5 billion for the group, still working their way back. Last week's net inflows, the largest contributors were short investment-grade debt funds and core plus bond funds, which took in $556 million and $510 million in net new money, respectively. Let's take a look at the sister category now, taxable bond ETFs. The group had $1.1 billion in net inflows for the week, bringing their year-to-date net inflows to almost $32 billion. Major contributors to the net inflows last week were the iShares iBoxx investment-grade corporate product and the iShares iBoxx high-yield core product, which took in roughly $500 million and $350 million in net new money. On the sell side, we see the SPDR Barclay 1 to 3 month T-bill product, which had almost $300 million in net outflows last week. Let's move on now to our muni bond fund category. As mentioned previously, they continued their streak of net inflows this week. $521 million for the week for the 28th consecutive inflow. For the year to date, this puts them at $14.4 billion on the plus side. The largest contributors last week, as well for the year-to-date, were high-yield muni funds, took in $220 million on the week, bringing their yearly total to $3.2 billion. And intermediate muni debt funds took in $214 million in net new money, bringing their year-to-date total to a $5.4 billion increase. Let's move on to our last group now, money market funds. As stated earlier, pretty large net outflows for the group, $5.1 billion. Although as compared to some of the recent weeks, a little less volatile than the recent weeks have been. Year to date, they've seen $56 billion leave their coffers. Major contributors to the outflows last week were money market funds and institutional U.S. government money market funds, which roughly had the same outflow, right around $4.6 billion, $4.5 billion. And on the plus side, We saw money flowing into institutional money markets right at $6 billion even. Well, that wraps up my report for this week. If you'd like to take a closer look at the data, please join us at our website, www.lipperusfundflows.com. And please join us here again next week where another analyst will be speaking about that week's fund flows activity.